Good evening, everybody. Welcome in, welcome in. We're going to get this going in just a little bit. Just going to give everybody the chance to hop on in. Good evening, Ryan. Yes, McBrotherson. It's like Toasty. Exactly. Welcome in, Aaron. Good to see you. Move this up here. All right. We're going to get this one going in just a few more minutes. Just going to give everybody the chance to hop on in before I do too much explaining about what's going to be going on tonight. But before I get into it, how's everybody doing? What's going on, Husky? Good to see you. Thanks for coming back. All 6 of these lectures you were here. Definitely appreciate that. Very nice. All right, I'm going to send out one more message letting everybody know we're going to be getting started soon, and then we'll get right into it. Actually, pull up one other piece that I was missing. All right. Anybody got anything interesting going on right now? Anything unique going on with their trading or lives in general? Not much. Fighting earthquakes. You talking about the earthquakes that were in like LA or something? Or that one earthquake? Staying out the way. Not a bad call, Aaron. Not a bad call. All right, we're a couple minutes after the hour, so I will go ahead and get this one going. So I want to just show this slide really quick so I can talk about where we're at. But for those of you who don't know what we've been doing the last 6 weeks in these lectures, we have been completing this volume price analysis course series. Over the last 5 weeks, we've covered these 5 lectures. So we introduced the concepts, talked about some more foundational concepts, some applications, more advanced topics. And last week, we really began putting all the pieces of the puzzle together with a bit of a longer recap. The intent of today is really to cover a few more examples of just putting trade plans together from scratch. And then from there, I'd like to open it up to any just discussions or Q&A that you guys have related to these topics. We have a bit of a smaller crowd tonight, so that might not be the case, at least compared to how we started off the first class, but that's okay. I still think there's going to be some value in us opening it up for your questions. With that said, I want to just ask the question before I go too far into the lecture. Is there anyone here tonight who has no idea what I'm talking about and has not seen any one of these VPA classes that I have done over the last month and a half? Anybody who is completely unfamiliar in here for the first time? seems like no, which is good. I will say if this is your first time in one of these VPA lectures, again, I've been doing them over the last month and a half. I will say it's probably not going to be the most amazing lecture for you because a lot of what I did in the last 5 have really been building and building and building on the concepts we've been covering in the previous classes. And at this point, it's kind of like you're joining the college class at the week before finals week, and understandably, most people would probably be pretty confused if they haven't learned this stuff before. So I want to just put that out there. Typically, I'll always cater my classes to those who haven't been to any ones of the previous ones before. But in this specific case, we've been doing a lot of that, and I really want to focus on some more kind of putting it all together type of topics, and make sure I don't spend too much time doing any recap because I can definitely take up a good chunk of the beginning of the lecture. So with that said, I'm really going to move into just some examples. As I mentioned, big idea for this class is going to be to put the ideas that we've talked about in the last 5 lectures all together, and really start developing more trade ideas, put it all together, and then also, again, as I mentioned, open it up to any questions, comments, concerns you all may have. And also if there's any examples that you'd like to walk through, you can go ahead and I'll let you unmute. We could talk through some charts that you want to look at, or if we want to just do examples for the rest of the class, that's great as well. So pretty heavy example-based class today coming up. It's really there. I didn't even make a PowerPoint for tonight because it's going to be strictly focused on the charts. Any questions, comments, concerns before we get moving? Okay. If there is truly nothing, cool. All right. If there's nothing, let's just get right into it. So a couple weeks ago now, I mentioned kind of the procedure for finding trades from scratch or on a weekly basis. I'm going to go through that again pretty much from the start. Yeah, so just getting right into it. We mentioned this kind of FinViz scanner a couple weeks back. As you can see here, it groups stocks by sectors. So 11 sectors of the market. It shows the performance of each one of those sectors over the last, couple different period timeframes. So you can see year to date, technology obviously outperforming pretty much everything. In the short term, a lot of green, but technology definitely the strongest as a whole. So what really I'd like to do is, as you mentioned, generally speaking, we want to be looking if we're in a market that is overall in an uptrend, which in the short term, I definitely wouldn't be able to call this an uptrend necessarily. Well, in the medium term, I guess, not technically an uptrend with these lower highs here. However, zooming out to the weekly, absolutely, there's no denying that we are still 100% in an uptrend. If you think otherwise, I don't have anything to say to you because there's no way to see it any other way. So that said, market's still in an uptrend on the higher time frame. So as a result, it's going to continue to be easier to look for those long trades. Now, obviously, there's going to be intermediate pullbacks like we experienced in the last week. It's important to kind of take a step back and wait for those buying opportunities to set up, right? We're not here to chase the bottom or try and time a bottom in any way, but definitely just being mindful of those larger term trends. So that said, market has been continuing to move higher off of this significant low. Definitely not fully out of the woods yet. Taking a look at the SPY, still at a pretty reasonably important kind of area here. Also been moving higher on dropping volume. So to me personally, this is definitely not the place to put the foot fully on the gas in terms of the long side. Still a great time to be patient. But that's it, right? It doesn't hurt to be kind of mindful of the individual stock setups because once the market really does transition back into a longer term uptrend or medium term uptrend, the individual stocks that have the most relative strength now are going to be the ones that outperform in the next leg higher. That's just typical cycle analysis there. So what I want to do again in the scanner, and I'll go ahead and send the link to this in the chat, is just take a look at what's been outperforming over kind of the medium periods here, which is going to be our technology and our utilities. So I'm going to just focus on tech stocks for now. So I'll go ahead and click technology. You can see it gives me a whole list of charts here. What I like to do is just filter this down a bit. So by changing the market cap to be a bit larger companies, making the price over a penny stock, giving or filtering by reasonable average volume, and then filtering by stocks that are optionable, so stocks that actually have option contracts available for trading. And then going into performance here and sorting. Oops, I also need to sort by sector, I think. Yeah, sort by sector technology. There we go. So then go ahead and sort by the stocks that are performing the highest in this week, then back into the charts. And then typically what I like to look for just very quickly is on these smaller charts, just kind of scanning for positive looking volume patterns, clear relative strength price action. And right now off the top of my head, or at least off of just this quick analysis here, pretty clear to see that PLTR has some serious relative strength over the last few weeks. Let's see. I mean, this 4 name, I don't trade this, but this definitely looks pretty solid here as well. Let's see. ARM not really looking that solid. Dell volume patterns aren't really looking that solid, even though a decent move higher in the last couple of days. SMCI, not the most beautiful volume patterns there either. Just kind of continuing to look through here and see if there's anything looking incredibly enticing, anything on the verge of a breakout, anything with suspicious amounts of buy volume. PanW looking like it's breaking out this short-term downtrend here. That might be an important one to pay attention to. Going back a little bit. Even SHOP looking pretty interesting here now as well. So I think that gives us a decent place to start, at least those PLTR and SHOPs. So really what I did there is filter by names with that are performing, or excuse me, the workflow there was starting to filter by sectors that are performing the best. And really, I just chose the 1 week time frame because obviously over the last 1 week, market's been on a pretty significant rebound off the lows. So trying to pay attention to what's been rebounding the best in the short term, which looks like names like PLTR and SHOP. And then now that we sorted and found these names that are looking a bit more positive than others, we can start to look at the individual charts. And again, as always, we always want to start from the higher time frames. So I'm just going to clean this one up a little bit here. Typically like to start from the higher time frames, clean it all the way up, and then start to just figure out where our most important levels are. And PLTR, I know, has only been around for like 4 years. So if I filter by this, we'll really have all the price action. So pretty clearly, not pretty clearly, but as we talked about in prior lectures, some of the most important levels to be paying attention to are going to be your pivots in trend, which are going to be your higher lows and lower highs. So these would be examples of lower highs when we were trending downwards. And these would be examples of higher highs when we were trending upwards, right? All these levels right around here. So those pivots in trend are always going to be important. So I'll go ahead and mark these prior pivots here and here. And then, yeah, I mean, that pretty much covers everything we need to see for now. Also a pretty big gap on the weekly, which there's no way that doesn't end up being important. So go ahead and mark that weekly gap out. And then really, I mean, the next significant level that we have above is all-time highs. So go ahead and mark that 45. Me personally, when I mark out weekly levels, I like to give them a color code. So I'd mark this just orange, so I know it's from the weekly. All these can be orange. And then also, as we've talked about before, go ahead and take a look at the volume profile to see if we can kind of validate these levels. I'm not going to give any reminders on the volume profile. I'm expecting you guys all to remember how it works. So it pains me not to talk about it, but I do want to try and stay away from it. But as you can see, below these pivots here, we start to get a bit more of a significant volume shelf below, indicating a larger amount of support. So that's a positive sign, right? We're breaking above this large area of prior resistance, which is definitely something that we want to see. And also, I think something that Tilio highlighted in his newsletter maybe this past week is that there's definitely a significant lack of resistance above here. As you can see on the profile, right, there's no significant shelves, and it really tapers off pretty significantly. And I'm just going to make that a different color here so you could all see a bit more clearly. We'll just make it blue for the time being. So as you can see, very clearly, right, the amount of resistance as price moves higher definitely tapers off. So moving on to the daily, generally speaking, we want to take a look and validate that those weekly levels are still looking good. Then I like to throw on some shorter term moving averages, which in this case, I have the 9 and 21. I actually probably prefer throwing on these guys, the 10 and 20 EMA shown in this little band configuration. So obviously pre-earnings, big gap down. I think a lot of us probably were at least watching markets on this day. This was after we came out of the weekend where the Japanese markets were having some pretty significant turmoil. Interesting thing to note here, though, is over the past few months, really, definitely some really positive volume patterns on this name. You could see on this gap up back in early January, massive volume as price moves higher. Here as well, right? Nice gap up with a lot of volume again. Same idea here, right? Nice gap up as a lot of volume comes through. Very next day, a lot of volume as price moves lower on a kind of lesser than expected or more lackluster than expected earnings report. But all in all, as it relates to this chart, really positive structure, right? I mean, you zoom out, there's nothing really to hate about this name, especially looking back, right? Again, all through this area, right? Just nice, reasonable consolidation in between these levels. Really no major red flags. Just sitting in a range. Clearly buyers present as we entered this range here, here, and here, right? Massive volume days. As you can see by this volume that's highlighted yellow. Hopefully everybody remembers what that means, but if you don't, essentially it just represents high volume. And then also here, definitely notable. Still, we have some above average volume during this time frame as well. I will say, I'll be the first to admit, definitely a bit more lackluster amounts of volume compared to this. But regardless of that, right, still above average compared to the average of this time. So still notable, right? It's not a reason to just write this all off. Although, would be nice to have a bit higher volume. That would definitely be a bit better confirmation. But now, kind of zooming into recent price action, over the past couple days, we've held and maintained above this key weekly pivot right around this 29.34 area. And we're starting to just sit right on top of this weekly gap. So definitely a pretty clear area to be watching out for right on top of this weekly gap. I didn't dial in this level very clearly, but definitely want to be paying attention to. Obviously acting as resistance, as we can see multiple wicks off the top area. And at this point, I would definitely be the first to admit it's probably a little bit late to get super excited about trading this name. Obviously, we have had a massive move, and I think MMA even was one of the people buying shares down here before earnings, which, I mean, he was mostly just trying to YOLO earnings, but props to him. Got to give him his flowers where he deserves it. But anyway, definitely this is a name that is looking like it has the potential to be a continued winner. We have everything that we could be looking for, right? We have a big break over prior resistance, also some massive weekly volume last week as well, massive bullish engulfing. So that's one thing to like, right? Without thinking about the context of the rest of the market, there's a lot to like at this point in time. Obviously on the daily, right, we have a positive trend now with the 10 EMA over the 20. Definitely a lot of distance from current price to these moving averages. So I would be a little bit hesitant getting long for more than a day trade or a very short swing up at these levels. I'd definitely like to see probably a little bit more consolidation in this area and let these moving averages come up closer to price before getting super excited about taking a trade here. But all in all, right, positive volume patterns as we've consolidated. Volume starting to taper off a bit as price moves higher, which isn't necessarily a big red flag, but just again, another reason for us to probably pump the brakes and not be too excited about getting long at these specific levels. But really the important thing for me here is less about getting into trades as the market kind of still remains at a pretty key inflection point, but rather figuring out what's outperforming the market when it's under pressure, right? Oh, no, I didn't mean to click on demand. God damn it. This is going to lag. Never mind, actually. Wow. When I used to click on that on my laptop, it would like freak out my whole computer. But one of the more important things to be mindful of as the market's, arguably just coming out of this correction and still definitely under a bit of pressure, is looking for this relative strength, right? And again, just comparing this to the SPY, right? It's very clear these two charts do not look the same, right? They just don't, right? There's absolutely no similarities here besides this massive drop. But outside of that, the reaction following that massive drop is completely different, right? We take a look at the IWM, which is a bit more representative of the sector as a whole, which I don't really think PLTR is technically a small cap anymore. Let me just check really quick. PLTR. Whoa, what the hell is going on here? This is not what I expected to be seeing here. Okay, I'm bugging out. Yeah, so PLTR market cap, nice, not applicable. That's really helpful. Anyway, I wouldn't say that PLTR is probably still considered a small cap at this point. I think it's probably close to a couple $1 billion company, if not more. So, kind of on the edge of being considered a small cap, but still, I think IWM is more representative of the group of stocks that PLTR typically sits in as it relates to kind of market capitalization. That said, these two charts also have pretty much zero similarities besides a massive drop, right? Small caps as a whole have made some pretty minimal progress from the significant pivot, whereas PLTR not only has broken back above the moving averages, but also is above this recent swing high. So, really, all this to say that this is not necessarily a name that is interesting or important for us to get in long at this point in time, right? And volume price analysis also can help us determine that. Price is moving a little bit higher. The spreads of candles are also decreasing as price moves higher. Volumes decreasing as price moves higher. So this move up is getting weaker. It's losing steam. 9 times out of 10, this is going to result in some consolidation, some small pullback, which is no reason to be bearish. It's just a reason to take an entry long when that occurs. There's always going to be that 1 time out of 10 where it's just going to break through this and somehow double the average daily volume on some crazy news and go straight to 45 in a single day, which after me saying all this, I wouldn't be surprised if that's what actually happens here. But very typically, seeing a move like this leads to some kind of continued consolidation, especially if we get a move lower in the markets after they've retraced back into these moving averages. Definitely wouldn't be surprised to see a smaller retracement in this name. But really, the moral of the story here is that volume price analysis and really technical analysis in general is telling us, at least as it relates to the indices, that it's not really the best time to be getting long for a swing trade, right? If you were able to catch the bottom here, that's great. Here is probably an excellent place to be trimming off of some of that long position. But as it relates to a new long position, not really the most optimal place to be thinking about getting involved long, especially considering we got a lot of economic data coming out for the rest of the week. But again, a little bit of a different example here, right? It's less of an example of a trade that's really something for us to get in right now, right this minute, and more of us kind of using the concepts of VPA to understand, hey, this is very clearly a strong name. This is very clearly a name that we should have on our watch list, especially if the market begins breaking out with more significance. However, at this point in time, it's probably one to just kind of keep in our back pocket and continue to monitor. This is really the way to be thinking when the market undergoes a correction. You want to be looking for those individual names with the most relative strength and the strongest looking charts. And obviously, I'm adapting this lecture a little bit to the current market conditions, as I think is probably most relevant. But yeah, I just realized that was pretty much 20 minutes of me talking straight about this chart. I'll open it up to any questions, comments. If you'd like to raise your hand, I'm happy to talk to you on the mic, as this is definitely meant to be a bit more of an open forum. I understand that maybe not all of you will want to do that, but yeah, any comments, questions on kind of what we've covered so far with PLTR? Any questions on things that relate to our prior classes? And yeah, I mean, what are your guys' thoughts on that? Does that make sense? Kind of understand how we're adapting to current market conditions? Questions, comments, concerns on any of that? Give you guys a second to think about that. Good so far. All right, Marina, nice. How's everybody else? Feeling okay? Cool. Let's check one thing. How do I get them yellow volume bars? So it's a custom study that I have posted in my tab. Should be pinned, but I'll just go ahead and share the link with you here, just so you have it in the chat. Cool. There's the script for those yellow volume bars. I'll show you how to add it really quick, just because it's pretty weird right now. Don't click the link because it's just not going to work. Go ahead and click Setup, Open Shared Item, paste that link in here. You can click Preview. It'll show you, and then you can just click Import, and it'll import. But I'm not going to do that because I already have it. Works great. Just don't click it. Cool. All right. We had one more example that came up in our scan there, which is Shopify. And this one actually has a little bit of a different vibe to it for sure. But same idea. Um, so I'm going to spend a little bit less time covering this one in specific. But again, as I mentioned, very, very similar idea to the PLTR chart, just a little bit different overall. So Shop's been one that we've been watching, at least in my tab, trading it for a while. We first bought it right around here. Took some trims here and ended up selling some more there, and then held the rest, unfortunately, back to break even, about a quarter of a position. But anyway, Shop, very similar idea, right? It's a name reacting very positively to its recent earnings report. It looks like it doubled the expectations set by the street, which very, very big deal there, coupled with a massively high volume reaction to that report as well, with some nice continuation higher so far. And this is, again, not going to cover this in too much detail because it's very, very similar. But we have the exact same idea here as PLTR. We have this high volume kind of bottom forming here, which signifies to us a lot of institutions shifted their positioning on this name at this area, right? Signified by this massive amount of volume. So a lot of sellers exited the market, but in order to sell, there's got to be somewhere buying. So we see that kind of peak of negative sentiment and that buyer kind of max involvement, or I guess what's also could be called as capitulation, occurring right around this area. Which also, if you remember that graphic that shows the market cycles, this would be kind of our reversal extension. And I guess I'd probably be a good idea for me to pull that up really quick. So let me just do that really quick. Let me see if I can find it. I don't know if I have that. Oh yeah, cool. I have the screenshot. So this is that graphic that we showed a couple lectures ago. This would be right at that point that we just highlighted, that reversal extension point, where the market essentially has gone too far lower. Well, not too far, but it's gone to a far enough point to the downside where buyers' interest really peaks and they begin to step into the marketplace. And now we're kind of at this point where we've kind of popped back through the EMAs and we'd really be waiting for this EMA crossback phase for price to come back down, retest the EMAs with this positively trending 10 and 20 moving average. So again, not going to cover this too much because it's very, very similar to PLTR. But again, another name to keep on watch, right? Showing massive relative strength while the market continues to struggle below the moving averages, which some names beginning to emerge, but still important to note, right? Massive relative strength above the moving averages, moving through some pretty key pivots, right? This 70 level was a big one. I think also this was a level on the shelf as well, if I remember correctly. Maybe more on the weekly. Come on, I can't get to the weekly. Not too bad. Not as bad as I remembered. I mean, either way, yeah, there's definitely a big shelf all throughout here. So coming into a larger area of resistance, which again, not really the best place to be getting long right at this specific moment, especially without a pullback, considering we have that massive shelf of resistance directly above. But again, still something to just keep in your back pocket. It's just like PLTR, right? Really with these names, we want to be able to take that note. Okay, they're really showing relative strength now. We definitely don't want to be chasing here at the top, right? Obviously, this name is up $20 in 6-7 days, so not the place at this point to be slamming your whole port into this one long. But again, just another one to keep in mind, and that's really the purpose of using this type of scanner, is it helps you look through a lot of charts pretty quickly and get a big idea on where different names are trading at, and look through some more positive volume patterns. Look for that price action that's on the verge of a breakout or coming into a larger level of support. I'm just trying to scan through and see if I can find other examples quickly. AMD would be an example of a name that's looking a bit weaker, right? We got that massive volume there at the lows, but really no significant move higher and just kind of trading like the rest of the market. So something that's not as interesting to me at this point in time, especially when the market, is still kind of in a tricky spot. Trying to find some other decently strong looking names that we all know, but not really finding it. I can kind of increase the filter a bit to just our mega caps really quick, and then filter by our best performing mega caps. So we have NVIDIA at the top of our list. This is the best performing mega cap name over the last week, which makes sense, right? Going to be definitely one to be paying attention to. Everything else, Apple also looking really, really decent as well. Definitely another name showing more strength than others. Microsoft still pretty weak. Another thing to note is that some tech stocks like Amazon and Meta are wrapped up in the communication services sector for whatever reason. So Meta, for example, showing some relative strength here, but the volume patterns aren't quite what we'd expect. So just based on that scan there, Apple definitely big amount of relative strength over the past couple of days. And also even before this correction took place. And you can see, I mean, literally every single day is a green day. So yeah, another one trading at a pretty important level, still held above these prior all-time highs, which amazing entry if you were able to catch it down here. I think it had one level resting right around that area. Those prior all-time highs, definitely a golden spot. But again, right, when the market is in correction, we have to adjust the way we're thinking about names, start to look for the names that are outperforming the rest of the market, using our VPA strategies, using our VPA methodologies, and looking for those names that are strong, because inevitably there's going to be some kind of consolidation, some kind of pullback as the market is still weak into these moving averages. And when that does happen, we should be looking for these individual stock setups to take entry on in order to be best positioned for the next move higher. So a little bit of a different kind of way to think about these concepts tonight, right? It's not necessarily something that we're on the edge of our seat to get involved in, right? The market has made a significant move higher off the lows. And as a result, it's a great reason for us to kind of take a step back, start identifying names that have come out of this correction better than others. Like, for example, another way to think about this, and just giving an analogy, is let's say you witness a car accident on the freeway and the two cars both collide into the same brick wall. One car collides into the brick wall and it's unscathed. The other car collides into the brick wall and it's like totaled, on fire, and turns into ashes, right? What car would you want to purchase for your own driving, right? You probably wouldn't want to purchase the car that has fully collapsed, right? You probably want to purchase the car that held up through that difficult event, which this is the exact same idea that we're following, right? These are the exact same concepts that we're employing when we do these scans, right? We're looking for the names that have the most relative strength, right? So that have been performing the best in the sectors that have been performing the best. So we're finding the top of the line names that have been able to weather the storm, which in this case, it was a correction, right? So about a 8% move lower in the overall marketplace. We're looking for those names, identifying them, taking note of them, and being ready, essentially checking those on a daily basis and waiting for those to form some more constructive setups in order for us to take action on them. That was a lot, but does that make sense as a whole? How's Husky feeling? Husky's feeling yes. Big brother says feeling yes. All right. Very cool. So classic toasty analogy. I thought that was a pretty good one. I just thought of that one right now. I was pretty happy with that, honestly. Anyway, that's really the big idea of the market right now. I'm going to go back and cover a couple historical examples, but we have to change the way we think about markets based on the overall conditions, right? We can't always be saying or thinking, I am always looking for an entry, right? I'm always looking to get in. It's like, well, no, right? That is not a good idea. Unless you're being more versatile, right? You're open to trading both downside and upside. Me personally, I'm more focused to the long side. So when the markets move lower, I view it as an opportunity to wait, study, prepare, and find the best names that are coming out of that move lower, which right now, just based on this quick scan, it's looking like right now our strongest names are Apple, PLTR, Shopify, maybe some more that we didn't find. NVIDIA was looking pretty good, which all makes sense, right? A lot of these names are prior, well, not really PLTR and Shop, but at least Apple and NVIDIA were the market leaders before this correction, and they've quickly recovered and turned into leaders once again, right? So it's not time for us to act on these ideas yet. The market's definitely under pressure, and still, right at some critical areas of resistance. QQQ starting to move a little bit higher on declining volume. It made it back above this uptrend, which is a good sign, but right at the moving averages. So not really the time to get super, super aggressive, right? Ideally, we wait for these moving averages to flip positive, then we get long based on these VPA ideas, right? Either we time the bottom perfectly, which most of the time it's not going to happen, or we wait for that constructive high probability long setup, right? Pretty simple. We don't need to catch the market in every trade, right? We just need to be able to ride the highest probability trades. As I said last week, right? I'm very happy waiting for the market to be easy, right? I'm very happy waiting for trades to come to me, right? When the probability is fully in my favor, I don't mind waiting at all. I can be very patient as long as I need to be. And I think everybody should share that same mindset. All right, so let's cover a couple more historical examples. I got to just look through my PowerPoint really quick. I don't remember the ones that I wanted to cover last time, so let me just see. So I said Tesla 425, which we focused a lot of time on that. And then MU 524 and SPY 715. Let's focus on SPY since we're kind of talking about the indices. So SPY 715, what do we have there? Okay, this is good. Yeah, this is a little bit of a downside example. So I want to actually give you guys, before I even show you guys this downside example, a lot of these lectures have been focused on long-sided trades. I want to actually take the opportunity to focus, or at least give an example of these kind of VPA concepts working to the downside as well. And to do that, I'm going to invert this chart of SPY and look at it this way. So let's check this out really quick, and then I'll flip it back, because me personally, when I was first learning to trade the downside, I needed to see it this way in order to really get it. I don't know what it is mentally, but it just feels so much more intuitive to trade to the upside rather than the downside. So essentially what I did is just invert the chart of SPY here. And if you use TOS in order to do this, just put a minus sign in front of it and it inverts it. Another cool thing is you could also add two charts together. So I could add SPY plus QQQ and see their combined price action. I could add SPY plus QQQ plus, I don't know, Chipotle if I wanted to for whatever reason. Anyway, negative SPY. So taking a look at this, right? If we zoom in on just this specific area, right? Just a specific area where we got this short-term move lower. I think it's pretty interesting to note this specific behavior, right? Which again, remember the green bars are what we're looking for here. If you'll notice, from pretty much mid-June onwards, all of our above average volume days are green, right? All of our above average volume days are pretty much green, which is definitely something to be mindful of, right? Previously, looking back, a lot of our above average days, well, I'll say most of the above average days ended up being these red days, right? And I'll just remove this high volume study just so it's really clear. A lot of our above average volume days were either red or just kind of these green and red mixed. The only other time we had this above average green day volume or bull volume, and again, I'm just trying to be careful with my terminology because we're looking at the chart upside down, was the last time we got a short-term move up. And again, this is the inverse chart, so a short-term move up is a short-term move down. Here again, we start to see that same idea, right? Where we're starting to see that above average bull volume come through. With the bear volume pretty much staying about the same through this time period. So obviously nothing for us to do, right? We have to have volume and price together. And in this specific example, we were just seeing that green volume or bull volume step in, but weren't really cracking through this area of resistance for the most part, right? And I mean, this was actually technically a gap down, so not really as notable, but not really seeing any specific kind of concerns here just yet, as we mostly just bang our heads against this level of resistance. However, here, things change a little bit. We start to get these multiple bear days back to back, also right above average, right, where we're seeing that small increase. When price pulls back, we get that declining volume. When price breaks this prior level of resistance, we get rising volume once again, right? And again, another pullback on declining volume. And ultimately, we break out once again on rising volume here as well. So all of this, and if I just flip this back around, we'll see how this all looks. Okay, it all disappeared. That's fun. Anyway, all of this to show that this kind of weakness definitely was showing its signs that it had legs a little bit lower pretty early on, right? As traders using volume price analysis, it's always going to be very difficult for us to catch the exact top or the exact bottom. So For example, obviously we had this kind of seller volume stepping in here, but nothing really too concerning yet. What's different about this day right here? And I want to ask the rest of you, what changes here? What's different here? What's different on this bar compared to any other bar that we can currently see? Any thoughts? Don't think too hard about it. It's bearish. Yep, but there's other bear bars. McBrotherson says gap down. Aaron says close near low on high volume. I agree with you. A little bit of a wick. Yeah, maybe. A little bit of a wick. McBrotherson got it. This is the only bear bar in this entire chart right here, which we're looking at about 3 or 4 months of price action, and we could zoom out even more. In this time frame here, which I'll just zoom in right here, find me another time where we gap down with a bear bar closing near its low. The only answer is right here. And look what happened after that. Price moved 5% lower. Find me another bear bar closing near its low with a gap down. This one right here. Maybe. Not bad. Also on high volume. So that could be an example, right? But we didn't get any follow through. That would be an example of one of these concepts failing, right? But for the most part, right, I guess we're 1 for 1 here. But zooming out even further, which I'll even go to the past 2 years, there is not many times that price gaps down with a bear bar closing near its low. Here, here, here. So as we look at more history, the pattern becomes more evident. When price gaps down with a bear bar closing near its low on above average volume, that is not a signal to get long, right? If we're paying attention here to our volume price analysis, this is telling us that this is a validated move lower, right? Price has moved lower with a widespread bar on increasing volume. So as price moves lower, more sellers are stepping in, which tells us that the trend to the downside is strong, right? This is at this point a confirmed reversal in my opinion, especially considering the fact that we got follow through lower the next day, right? The very next day, price moved lower again. Price then sat in a range for the next couple days. Then again, right, another move lower on rising volume, again on a gap down. This one a bit of an anomaly as our spread decreases in size a bit. But the point I'm trying to get across here is volume price analysis can really help us identify not necessarily times where a reversal is set in stone, right? There's always going to be times when this doesn't follow through and we end up moving higher the next day. But this is absolutely a signal to de-risk, sit back, and be a little bit patient, right? We have to see some type of signal in the opposite direction in order to be more confident that there is a bottom in, right? Which you can see every time after a gap down, that's what it took, right? We get this gap down here. When did price reverse? Well, find the highest volume green day. That's when price reversed, right here. Highest volume green day. We look at another gap down here. When did price reverse on this bear gap down? Well, the very next day, equally on par, high bull volume. Here, on this gap down, when did price begin reversing? On the highest by volume green day here. I could do this all day. Here, when did price reverse? High volume bear gap down. When did price find a bottom? On the highest volume, biggest spread, green day. Time and time again, this pattern repeats. And here, right, this is a pretty disgusting looking bar right here. I mean, doesn't look great. But the very next day, we get a massive high volume bar, breaking prior highs, and a small continuation higher. Moral of the story is when you see a move that is opposite the trend, or I'll say a strong move in trend, you're going to need to see an equal and opposite move in the other direction in order to be confident that the trend has reversed, right? Plain and simple. Every single time we see these bear gaps down in an uptrend, it takes an equally large bull bar to begin moving higher again. Every single one of these examples. This, not quite a gap down. This is just interesting. I don't know what's going on there. But every single one of these examples, it's the exact same story, right? When did we find a bottom off of this bear gap down? When did price actually bottom? The green day on high volume, right? And now price is $30 higher in 9 trading days or 8 trading days. Does that example make sense? So really, these high volume days are so important to be paying attention to because 9 times out of 10, a high volume day with some kind of gap is going to be important. I mean, every single time. This, not really high volume, still is important. This, high volume day, it shows red, but this is a gap up, right? This is a gap up. The volume bar shows red, but it is an above average day as price moves higher. Well, who would have thought? Price continued higher. Here, we have an above average volume day, price move lower, big red outside bar. After failing to get above this resistance 3 times, every time we tag this resistance, more sellers step in, right? The first time we come to this resistance, we have this amount of sellers. The second time, we have more sellers. The third time, we have more sellers. That's the exact opposite of something that we'd want to see, right? Remember the example that we covered on Dell, where if we see the amount of sellers decreasing as we tag resistance, we should expect price to move higher. If we see the amount of sellers increasing as we keep hitting the same resistance level, that is not a bullish signal. That is not a reason to be confidently long. So the moral of the story here is these high volume days give us so much information. And if you're not paying attention to them, you're doing yourself a disservice, right? Every single bottom is coupled with high volume. Every single top is coupled with high volume. It's always the case. Always, right? Very clearly, right? There's no way around it. This is clearly a short-term bottom. Will this end up being a long-term bottom? That's up to interpretation, right? We'll find out. But for now, right, it's exactly what we wanted to see on a bottom, right? Massive amount of buyers stepping in as price gaps. I mean, price was down, what, up to 5% on this day? Yeah, 4.5% in a single day. Not something you see very often. So the last thing that I want to mention is structuring a trade idea off of something like this. It's pretty simple, kind of 2 ways, right? When you see a move lower in trend, generally speaking, pay attention to the low of that day, get short below, right? So that's pretty much how I trade it. So if we look on the 5-minute, how we reacted, let me color this level so we know which one it is. Now let's look on the 5-minute to see how we would have traded this. This was that level. The very next day after the open, we held this level up first. So maybe an excuse to try and take a long off of it. Excuse me. Then broke below it. Decent follow through below. I mean, this is a $3 move. This is very profitable. However, no continuation below, right? Pretty solid reversal. And honestly, it's kind of a harder one to catch. I think the most notable thing about this specific day, and the only way you could have possibly caught this as a reversal, is the fact that here the volume was higher than the open. Again, that looks like a continuation lower to me. This is actually a pretty difficult one. Typically, you'd want to see high volume on this reversal bar, which we didn't. Me personally, it would have been hard for me it definitely would have been hard to try and get long here. There's no doubt about that. And would have been hard for me to want to sell my full position short here. we didn't really get a great volume price analysis signal saying that this was the bottom, and that's going to happen sometimes. And it's important to show the wins and the losses, right? It's not always going to be perfect. And you can see here, right, even on the daily, this was difficult, right? This move lower was very difficult to try and catch. And there's no way around that, right? I'm not going to beat on the bush and act like this was really easy to make money off of. It wasn't. And I think the reason behind that is probably because this was the biggest move lower in a long time. And buyers were probably still trying to hold price up. Once we get another gap lower on increasing volume, definitely a bit better of a signal. But I can't act like it would have been a great idea to be short here either, right, through this weekend. Only because this is technically a volume price anomaly, right? We have increasing volume compared to the prior day, but decreasing spread. We got the gap, so not the worst thing ever. But this was a hard move to trade lower, which especially when the market is topping out. Me personally, it's easier for me to just take a step back, wait for things to set up. Not super as interested in trading the downside. I'm happy to take the time to study, review trades, and start planning for what I'm looking for next. So this was an interesting one and a little bit of a different example. And I think important to kind of show that just like any trading strategy, VPA is going to have a weakness or two, right? It's not always going to be perfect, which is why it's important to still be mindful of other sorts of indicators, right? For example, what the hell is this? That's not what I wanted. For example, this move lower, we were pretty much tracking right along the 50 daily moving average, right? Which is going to be an important level. Here, a fake out below, which, you can't do anything about that. But for the most part, these next couple days, we're pretty much holding the 50 moving average on the daily, which is a good reason for us to not be too excited on getting short. Anyway, that's really the big idea of what I wanted to cover tonight. Do you guys have any other comments, questions, concerns? Do you feel like we could go through more examples in another lecture? I'd really like market conditions to change so we could talk through like active trade ideas, because I don't really want to just like go back in history a bunch of times and say, oh, look how you could have traded it. I really want to talk through trade ideas kind of in real time when they're actually setting up in the market, so we can all follow through on paying attention to them, watching how they behave, and studying them live. Yeah, I think that's really where we're at this point. I think we really need to see some live setups. So I might just kind of play it by ear and hold another kind of VPA refresher once we start to have some more constructive setups in the market, at least as it relates to upside, right, where we get some more confirmed trend reversals. Yeah, any questions, comments, concerns with that? All right, Husky, you got it. Yeah, you think the kind of waiting for market conditions to change a little bit and just go for some real kind of, effectively it would be like me talking through my own trade ideas, essentially, because at that point it's going to be things that I would actually want to trade. It's just a matter of actually going through. Yeah, Aaron, we could certainly take a look at a couple. But like I mentioned, for the most part, I'm mostly on the sidelines right now. Like there's nothing I'm actively interested in trading at the present moment. Really what I'm interested in is PLTR shop, Apple and Nvidia. But like I mentioned, there's a lot of news coming through this week. So it's really not the best week for me to be a swing trader, right? Day trading, definitely. But I just don't have the time at the moment. But yeah, honestly, I pretty much covered my thoughts on those names. If you have anything you want me to take a look at and think it might be a good example, I'm absolutely happy to do so. And you can go ahead and put that in the chat. But I pretty much covered what I'm most interested in at the moment. Hood. All right, Al Brooks, we'll take a look at Hood. Hood's an interesting one, and I pulled that up a little bit just because I was actually curious. I saw that had some news come out tonight. There's nothing too special about it right now. It's not looking horrible. Definitely a nice bottom, but it's very clearly stalling at the moving averages right now. This is not the place I'm looking long on Hood. You got a lot of resistance above right here. If I was trading shares, I still probably wouldn't get long here, but I'd be more inclined to get long on it because, I wouldn't be as worried about short-term downside. But hood from a VPA standpoint, right? We have a high volume move lower, right? Signified by this big bar, and, obviously a nice bottoming formation forming here. And some nice volume as price move higher. But at this point, volume has effectively entirely dropped off and we're just back at the moving averages. So there's really definitely not a long here for me. This is not something I'm looking to long at the moment. If I wanted the long hood or if I wanted to get long on hood, I'd need to see some action kind of like this, where we get above this prior pivot, that 20 buck area, retest a little bit, kind of consolidate back to the moving averages. This is where I'd be looking to get long, which would be right around that EMA crossback phase. But for now, this is not the place I'm looking to get involved with hood. Disney, very similar idea. From a VPA standpoint, it's potentially putting in some kind of bottom here. If I was day trading it, I would be interested in it above this 86.40 level, only because it's getting really tight around here. But for a longer term position, I mean, again, a decent place to buy shares considering we're coming back to that area of prior demand, holding that volume point of control, holding this shelf. As far as like a longer term position goes, I don't hate it, right? We're at a nice level of support here. There's no way around it. A lot of support below as well. If I was getting long, it would be above this 86.40 area with a stop below 84.50. That said, as it relates to anything short term, we got the moving averages right above, right? So I wouldn't expect anything big past this 90 buck area. As this is in a full downtrend, right? This is completely in a downtrend. So if I'm looking to try and start a share position, yeah, now is a completely fine time to do that, right? We're at some great support. There's no reason not to position yourself for the long term here if you like this name. As for something short term, like, if I was looking for a short swing on it, yeah, I guess you could do the same thing with a smaller size. But the trend is, again, just to reiterate, the trend is down very clearly on all time frames. The trend is down, right? Weekly time frame trend is down. Daily time frame trend is down. The only thing we have going for it is that it's at this strong support and pretty high volume as we form this bottom here. So decent sign, right? And also really, really tight consolidation. So it actually doesn't look too horrible. Like this doesn't look bad. And I wouldn't mind getting long over 86.40, but I wouldn't be holding on to it very long. I mean, I'd be pretty antsy to start trimming right around this 87.50 area. But definitely something to be interested in for the long term at this level if you like it. CCL, you're looking at CCL. It had a gap down high volume, but bottomed on lower buy volume and looks relatively weak. I'd like to think that you're looking at this one short, Aaron, because if you are, I would be in agreement with you. We have this kind of key level right around here to watch out for. But if looking at this one short, from a VPA standpoint, this is exactly what we would be looking for, right? Massive gap down here. Rising sell volume as price moves lower, dropping volume as price moves into the moving averages, small increase in volume today as we reject the moving averages. I mean, this looks like ass. I mean, this does not look good long. It's just plain and simple. Could you get long on this? Yeah, for sure. You could try and get long, and sure, sometimes it's going to work. But the probability, in my opinion, definitely not really in your favor to the long side. If you were going to get long, it would probably have to be above this 15.20 area, which would make a good stop to the short side. I think really shorting off of this $15 level does make sense. If you didn't get the short off that 15 buck level, a short below today's lows also makes sense to me, below 14.50, with your target being right around these prior lows around 13, the high 13s to 14. But from a volume price analysis standpoint, this is pretty much an A+ short, right? Rising volume as price moves higher, right? Increasing volume as price moves lower. Small increase in volume as we retest the key level of resistance. This is exactly what you'd want to see for something to the short side. It just doesn't look great. And if I was to define my risk, it'd probably be a daily close above like 15.2, just because at that point, we're well above 15, especially if we got a daily close on rising buy volume. At that point, this short setup would no longer be valid. So in order for this to really work, we got to maintain this volume pattern. So we wouldn't want to see a massive buy day coming through the tape, right? We'd want to see this pattern kind of hold up, but as of now, it looks great in my opinion for lower. This looks like a really solid reversal, especially with this kind of like fake breakout slash double top right around this area. I like it lower, but yeah, another touch of 15 would be the ideal spot to short, considering your stop is 20 cents above and your main target is 50 cents above. It seems like a great opportunity. If you hit it, Aaron, definitely let me know. I'd be interested to see if it works out for you. I like it personally. Yeah, I think it looks good, especially considering we're kind of out of the summer season. So shouldn't really expect a massive increase in travel at this point or anything crazy coming out for them. Oil prices are rising, so definitely not a positive in terms of their revenues. Let's just take a look at crude really quick. Yeah, so crude moving higher off the lows, which corresponds to that recent high in CCL, I think, right around early to late July. Let's see. Yeah, so as oil prices began moving higher, CCL began moving lower. Maybe not a direct correlation. There's also that kind of global conflict phase. Yeah, I think this is a nice idea, Aaron. This is actually, I would say, this would be definitely a priority to get short on, especially if the market begins to show some more weakness. Like if we get some bad news, which I don't even know what we have left in this week, honestly, can't type SPY. If we get some negative economic data, start to see some follow through back off of this 50 moving average, 50 simple moving average, and also definitely some kind of little uptrend that we're following here on the SPY. That'd be one I'd be interested in short personally. Great example of relative weakness, Aaron. Very, very good. Cool. Well, I'm happy you guys had those examples. Those are pretty good. A DIS, CCL, definitely interesting for their own reasons. Hood too. One that's okay, Aaron, is Jets. JETS is like it's like travel, mostly airlines, I believe is what it's comprised of. I don't think it has cruise lines, but airlines and cruise lines kind of run hand in hand for the most part. So Jets is a decent one. It represents the airline sector as a whole, which very clearly airline slash travel is weak. But obviously SPY is always going to be more important. So it doesn't hurt to keep tabs on that. Cool. All right, everybody. Well, I think that's going to do it for me tonight. I appreciate you guys' participation as always. And we'll have some VPA lectures, some points sprinkled once we see maybe a bit more constructive setups to the upside in the market. But I just want to say thank you guys all so much for taking part in this course series. I'd love to hear your reviews, feedback on it. Go ahead and send me a message. Let me know what you thought and what you think we could improve for the next one. But with that said, that really brings me to the end of it. So thanks so much, everybody, for being here. Appreciate it. And I'll see you guys all in the next one. Awesome. Thanks again, everybody. Appreciate it. Thanks, Aaron. See ya.